G'day everyone, my name's Luke Whitington. I'm the Executive Officer of the Search Foundation and I'm your host for tonight's webinar with Professor Miranda Stewart and Dr. Mark Zirnsak. And I'll just highlight myself just while I do this bit and acknowledge country and tell everyone about the event. So I'd like to begin, as we always do, by acknowledging that we are meeting here in Australia on Aboriginal and Torres Strait Islander land. Sovereignty of this land was never ceded. This land was taken without consent, without treaty, and without compensation. I pay my respects to elders past, present, and emerging of Aboriginal and Torres Strait Islander peoples, traditional owners, and First Nations all across the continent. I'm on Gundungurra and Darug land here in the Blue Mountains, where we say Warami Garamarada. Welcome, comrades. We're very lucky to have Miranda Stewart and Mark Zirnsak with us tonight, but before we get into that, first I'll tell everyone about the event and then give a very quick intro to Search and then a 1-minute intro to both Miranda and Mark. And then Miranda and Mark will speak for 15-20 minutes each. And after that, we'll have questions, which I invite you to submit in writing in the Q&A section. I think Shan Turnbull's already got something in there. And then we'll wrap up on the hour. So to enable us to run this efficiently, all participants will be muted unless called upon to ask a question. After you've asked your question, please mute yourself again. If you don't want to ask your question yourself, I'm happy to ask it on your behalf. Let me know if you'd like to ask the question yourself or if you'd like me to ask it for you. The chat section is open, which isn't always the case with all of our webinars, but please use responsibly. But you can post links and things in there and discuss things if you like. So a quick intro to Search. Search is a membership-based democratic socialist organisation that links and enables socialist activists across political parties, generations and movements all around Australia. We aim to lift the horizons of the left, look beyond the immediate term, beyond the next election, and indeed beyond our shores. We have members from diverse backgrounds and interests, but we have common aims and values, summarised in our goal of democratic ecological socialism. We run socialist education programs, we publish news and views on our website and on Facebook. That's www.search.org.au is our website. And we put on events like this one quite regularly. I encourage you to like the Search Facebook page to keep up with our events and go to search.org.au if you're interested in applying for membership or simply to get in touch with us to talk about what Search does or to check out any of our event recordings. Our contact details are on our Facebook page and our website. Now to introduce Miranda Stewart and Mark Zirnsak. Miranda Stewart is Professor of Law at the University of Melbourne Law School, where she is Director of the Tax Group and is a Fellow at the Tax and Transfer Policy Institute at the Crawford School of Public Policy, the Australian National University. Miranda was the inaugural Director of the Institute from 2014 to 2017. She has more than 25 years research, practical and leadership experience in tax law and policy in academia, government and the private sector. She engages in research, policy advice and teaching across a wide range of topics, including taxation of large and small business entities, not-for-profits and individuals, international taxation and the role of tax in development, reform processes and budget institutions, and gender equality in tax and transfer systems. Miranda has an enduring interest in the resilience, legitimacy and fairness of tax systems to support good government. She tweets on tax policy at TaxProf on Twitter, and her personal website includes the full list of her publications and her CV, and I'll post a link to that in the chat. It's very comprehensive and really good website. Mark Zirnsak is Senior Social Justice Advocate for the Justice and International Mission Cluster of the Victoria-Tasmania Synod of the Uniting Church in Australia and runs the Secretariat of the Tax Justice Network. Mark's active in seeking social justice in the areas of climate change, refugees, modern slavery, regulation of the online world, family violence, tax reform, poverty and alcohol reform. He's a member of a number of advisory bodies to the Commonwealth and Victorian governments in these areas, and he has a PhD in chemical engineering. In tonight's event, we will address the question of what the priorities are for progressive tax reform and how we might get there. We'll hear first from Miranda and then Mark. So without further ado, over to you, Miranda. I'll just remove the spotlight for me and get it onto you.
Thank you very much for that. I'm sorry I gave you such a long bio. That was heaps of introduction, but I learned something new about Mark. I actually didn't know he had a PhD in chemical engineering, so there you go. Now, I wanted to share, but I'm disabled for screen sharing, so just might get you to make me a co-host. While we're doing that, I did explain I have a lot of slides, but I'm not going to use them all in the presentation, but I'm very happy to share them. So I'm happy to have them circulated if people might be interested in some of the charts, for example.
You should be able to share now.
Okay, let's try this. So let me just do, so is that a slideshow?
Yes, you're looking good.
Yeah, great, thank you. Okay, so when I'm asked to think about this or talk about this issue of tax reform or progressive tax reform, and thank you very much for the introduction. And actually, before I commence, I should say that I'm speaking to you from Wurundjeri land, the Kulin Nation in Melbourne, where basically I haven't moved from this room for the last 2 years, pretty much. But I'd like to honour elders past and present and say greetings to people on Aboriginal land around Australia. So when I'm asked about this question, progressive tax reform, I must say I really struggle, which is why I end up with a large number of slides. So what I struggle with is the story of taxation in Australia. And I always end up going back to the beginning and saying, well, what are you trying to achieve if you want tax reform? What do you actually think taxes do in the state? And how might we change those? So, that might be the lecturer in me as well. So I'm not going to spend long on that, but that is why I have some of these slides, is that little bit of kind of contextual understanding of taxes in Australia historically. So, and just in general. So why tax? Of course, we're financing government, and I'm happy to answer questions about modern monetary theory or the possible use of debt instead, but my strong position would be that taxes still finance government, and that is their primary purpose. They also achieve redistribution. They can also change behaviour, and so environmental taxes, for example, carbon tax. How can we fund it? Government, we can own or commandeer resources. We can have more public ownership of government. And of course, if you move along the socialist spectrum, you might be looking at more public ownership rather than less public ownership. But most tax systems, most governments have sort of mixed economies with more of a market angle these days, of course, and tax systems rely on that. And in fact, one thing to remember about taxation, although I didn't give you a chart on this, is that tax revenues essentially track GDP growth. As the economy grows, taxes grow in general. So government and the market are kind of fundamentally intertwined in our current system. Borrowing, printing money, seigniorage, currency control are not going to do most of the job. So I thought it's also useful to just give us that little bit of COVID budget context. And these are a couple of charts from the last budget papers. Of course, they're probably already out of date because the situation is changing pretty rapidly. But you can essentially see that we're below zero. So we're in the negative, right? For the long term, we're in the negative. That's that long-term structural balance is negative. So that's an annual deficit. Our revenues are not raising enough to cover expenditure. We're financing the gap with debt. And to some extent currency, but debt is pretty cheap at the moment. Interest rates are pretty low. So you can see that receipts are over the next decade and it's flatlining less than payments for government. Gross debt though, just to compare with other countries, this is sort of from the OECD 2021, that's us with the star in the OECD. The black dot is the 2020 COVID debt number, so it's already a year out of date. We've got a lot less debt than a lot of other countries. So you've got to put it in perspective in terms of our fiscal constraints, if you like. Having said that, most governments are not leading out of the crisis, out of the COVID pandemic by raising taxes. At the moment, what most governments are doing is lowering taxes or putting a halt on tax reform. It's not entirely true. Some governments are raising some kinds of taxes. Chile has enacted a wealth tax. They have kind of a history of wealth taxation in a crisis, and it may or may not be the best model for every country either. But you can see that that's a sort of a targeted response to fiscal challenge of COVID. In the UK, they're sort of raising, now that they've come out of the crisis a little bit and they're back into kind of economic recovery, they're kind of raising everything that's not called a tax. and in fact increasing the burden on workers quite substantially. National insurance contributions, which fund their sort of social security system, they're raising those, for example, and they're not called taxes. Okay, so this is again part of our Australian history. You know, this is in particular Victorian. This is the Eureka Stockade, which Victorian people, of course, know very well. And most people don't know, though, that the Eureka Stockade rebellion was a tax rebellion. And that we have deep in our kind of colonial history, at least, we have that statement that taxation without representation is tyranny. That's kind of a core part. So you've got to remember the kind of political and freedom side of taxation, as well as the revenue raising and distributing side of it. And this just gives you that sort of history of taxes in Australia over the century. So since federation, our entire nationhood, since 1901, we used to have a tax to GDP level, that's tax in the size of the economy, of about 5%. You can see it's tracked up and down, it's quite volatile, but over the years, it's gone up into this sort of level of 28%. Around about 28% of GDP. That last dip was the global financial crisis, and we will see another dip because of the COVID pandemic, I think, that you haven't got here. So the taxes sort of track the growth of the economy, but on the other hand, they've been pretty stable. Now, I do have some other comparative charts, but I am just going to flick through them. But what I did want to show is the breakdown of our current tax system. This is a couple of years old, but nonetheless, it's reasonably accurate in terms of our Commonwealth budget, the federal taxes. You can see how important that individual income tax is. Raises nearly half of federal revenue. Company income tax raises another 20%. And then super funds. And if you put all those three together, that's 2/3 of the federal taxes are income taxation, right? So it's really fundamental to our system. Everyone knows about the GST, thinks, you know, it's 10% and so on, but the GST only raises 14% of federal revenue. So it's less important in the revenue mix than you might expect. Other excises kind of make up a chunk as well, alcohol, tobacco, and so on. So when you're talking about tax reform, there's a question as to what you want to achieve. Do you want to raise revenue or do you want to cut taxes? So this, you know, depending on which end of the political spectrum you're on, to finance government, and which taxes are you planning on focusing on? How big an impact do you want to make in terms of the system as a whole? Will also depend to some extent on which taxes you focus on, or how you look at the tax mix as a whole, how you adjust all the different elements of the system. I take the word progressive tax reform as being that we might want to make our tax system fairer. We might want to use taxes to deliver more public goods in a fairer way, more redistribution, and to perhaps help reduce inequality more than we currently do. So those are some things that I've emphasised when I think about different forms of tax reform. But I have to say that those are all very politically challenging, and people will know, you know, will have seen that. So I'm just going to jump over that stuff. So, you know, as tax reform's been, I'm sure Mark will say this too, you know, it's constantly in the public domain, and yet it seems very politically challenging to achieve. And so the Henry Tax Review, which some people might have heard of, goes back more than a decade now. You know, we have Turnbull had said that he would do some tax reform in 2017. Before that, the rethink proposals in 2015. So we've had essentially 2 decades of kind of proposals and reviews, and not a lot has happened. It's a bit Groundhog Day. The one constant, I have to say, has been personal income tax cuts, has been a kind of constant theme at the federal government level, to my mind, rather unfortunately, or rather poorly targeted, should I say, in terms of progressive results. So these are our different types of tax. I'm going to jump over that. I do really like this quote, so I wanted to, again, thinking of our history, our income tax at the Commonwealth level goes back to 1915. It's more than 100 years old. It's been a critical part of our nation. And Billy Hughes, for all his faults, introduced it in 1915, and he said this, that it's peculiarly appropriate to the circumstances of a moderate community, an effective means of raising money for government and an instrument of social reform. And I think that the income tax can do that, and at the moment it does it less than I would like. So we're looking at efficiency, fairness, and then also a resilient and sustainable system. But what I might jump to is a few suggestions about what I think of as progressive reforms of different kinds of taxes. And then I think I'll leave it there and we can kind of come back in and go into some more detail if we want. So I'm just going to jump over that stuff. Okay, so personal income tax. As I said, tax cuts have been, that really almost the only thing we've seen from the federal government in personal income tax reform. Labor went to the last election, of course, with some proposals to close loopholes and tighten up some elements of the income tax. And, it was defeated. Clearly, those proposals were very unpopular. In particular, in terms of the tax cuts, I find that the stage 3 tax cut, which is already legislated, which is going to start in 2024, and which Labor has now signed up to, or rather said they will not touch. And I think politically, maybe that's essential, but it flattens our tax rate structure and it delivers most of the benefit to the upper end of the distribution, people facing the top 2 marginal rates. It doesn't do anything, I think, for work incentives or any of the economic goals it's supposed to do, and it costs a chunk of revenue every year. So in my view, it's bad, but we've lost that battle, I think. But I would be increasing progressivity. What I'd like to see in the personal income tax is also to broaden the base. So our income tax applies pretty heavily to work, to labour income, but does not tax capital income and gains as well as it could. So there are quite a few things we could do. We could remove or reduce the CGT discount that some people might be aware of, when you tax half the capital gain from tax. We could remove certain kinds of concessions and work-related expenses that favour the top end of the distribution. We might be able to move to a system where we have more coherent taxation of different kinds of capital income and gain, sometimes called a dual income tax. We have sort of the same rate applying to all kinds of capital income, and then you quarantine deductions and losses. We certainly want to reduce superannuation tax concessions, which have been wound back somewhat over the last few years, but are still very generous to the top end. The biggest personal income tax reform I would like to see, actually, in some ways, is actually an expenditure reform, not a tax reform. The highest kind of effective tax rates in our system apply to women in families with children going back to work, second earners in families, and also to people who are on unemployment benefits or some benefits and they are moving into work, moving out of benefits and into the tax system. And so, we could actually do some reforms to our transfer system, social security system, and childcare and family payments that would deliver a tax cut to low and middle income earners, essentially, because they are bearing these economic costs. So that's something I'd like to see done, and that could be financed with a better and more progressive income tax. Just a couple of other suggestions for other taxes, some of which I think might be a bit controversial. Perhaps not this one with this audience. As I said, we don't tax capital and wealth enough, in my view, and that has created increased wealth inequality, and there's been quite a lot of attention paid to that. And it's also generational. So as we get have an aging population. We have the people who own assets are getting older. Younger people are having more difficulty accumulating savings. And so we have an intergenerational inequality as well. So we really need to do a bit of redistribution, not just between rich and poor, but between generations, in a sense, in my view. So, you know, we could be levying land taxes on asset holdings, on land holdings that are higher, but I would still keep the stamp duty at the top end. We should reintroduce a bequest tax or an inheritance tax, in my view. It never raises a lot of revenue, but it's a pretty important part of the wealth inequality sort of policies. We should establish a register of beneficial ownership. This is a Pandora Papers. We can come back to that if we want. We should stop income splitting and avoidance with trusts. We could have a flat withholding tax on trust income. The UK does that. And you know, we probably should tax capital gains on very rich houses. In this example here, if you sold your house for $95 million, but you bought it for $5 million 30 years ago, and you lived in it all that time, that gain, that capital gain, is completely exempt from tax under our current system. A couple more things. So now I'm conscious of my time. I would reform our GST, and I would reform it in ways that people think probably is not progressive, but in my view overall would be. We should broaden the base of the GST. We probably should increase the rate a little bit. We should introduce a carbon tax, and we should reform alcohol taxation, which actually Mark might, I don't know if he'll say something about that. So some of those things will raise a lot of revenue, and we need to compensate low income households for some of the additional burden, but it would strengthen our system as a whole. Company tax, we should have a uniform company tax rate. We should be taxing our resources more highly than we currently do, especially iron ore and coal. And we should be doing that international tax cooperation for global minimum taxes. And then the last thing I would say is that I think we need a new sort of federal fiscal bargain. So our states have rather poor tax bases, although they rely very heavily on property tax of some kinds. We should probably recognise, we've seen in the pandemic how much work our state governments have done actually in, you know, sometimes people might criticise them, but that work that in terms of ensuring essentially public safety and health delivery in the pandemic, and also business support. I think that our states actually should be entitled to half of the GST and personal income tax revenue as part of a fiscal bargain that is more stable for the future. And I also think we should recognise Aboriginal land and governance through a grant system from the federal level. So look, I'm going to stop there. There's lots of things that one could say, but I think it would be good to hear from Mark, and then I'm happy to answer questions and go back into the charts if we want. I just thought I would finish with this one, which I really love, this painting by Sidney Nolan. None of us like paying it, even though we might think it's an important part of our governance system.
Thank you so much. That's incredibly rich and dense. There's so much there, and it's firing off all those things I've been talking about a lot in my activism around the Labor Party in New South Wales, amongst other things, for my sins. But so that's incredibly interesting. I've got a ton of notes and questions myself, and there's a few coming through already, but we'll go over straight to Mark to follow up on that. Thank you very much, Miranda. Over to you, Mark.
And sorry, so there we go. Okay, so I'm assuming you can now see my slides on this one. Great. And look, and sorry, I normally don't use slides, but obviously when we're talking about tax, a lot of numbers get used, and I think it's much easier for people to absorb numbers when they can see them rather than trying to listen on that. And Miranda, you know, thank you for your piece. I'm going to sort of cover off on scale of the problem from our perspective, and the Tax Justice Network is a global movement. And we have a very strong focus on developing countries. So it's not just Australia. So I'm going to sort of bring in a little bit of the global aspect as well. I'm hoping people don't mind a bit of discussion around the global situation as well. And I'll talk about some of the solutions, but then I'll talk about, some of the practical challenges we face in trying to get tax reform. And Miranda's already sort of raised some of those challenges that we do face. So if we look at scale of the problem, so this is Global Financial Integrity, do a report quite regularly. It's often a few years behind because they're collecting data globally, and they looked at just one type of tax evasion, which is trade misinvoicing, and the losses to 135 developing and 36 high income countries from trade misinvoicing between 2008 and 2017 was 13.7 trillion. In 2017, it was $1,280 billion. So we're talking quite large numbers. We then come down to Australia, and Miranda already did present some information, presented the information around this. So the ATO has done a recent estimate of what they call the tax gap, and that's simply the amount that was paid versus what should have been paid, and they provided an estimate. Now that's based on existing tax laws. So if you found a legal loophole that you can exploit, that doesn't get counted in the tax gap. So it is a more narrow definition in terms of looking at, well, what legally should it be? And they found the number there was about 31 billion, so about 7% of tax revenue was the tax gap. Interestingly, there's a lot of focus for Australians. They get very concerned about large corporates engaged in tax avoidance, tax evasion. The ATO puts that number at about 2 billion. Now, again, from the Tax Justice Network, we'd probably say, yeah, but that's because a number of these corporations also do use legal loopholes to avoid paying what probably should be paid. So yes, the ATO number is right in terms of legally what's probably collectible, but there's a debate around how much should they be paying versus that. Again, high wealth groups, so that's high net individuals plus private companies, tax gap about 800 million there. Again, interestingly though, we get a lot less community buy-in when we start talking about small business. And yet small business in terms of the tax gap is 11 billion. So it's sort of 5 times the large corporates. I think most of us had that experience. I've had 2 tradespeople in during the pandemic doing major pieces of work, and both of them straight up front said I could get a discount for cash, which is effectively telling me if I'm happy to help them in tax evasion, I can get a discount on the work they're doing. And often, look, and I've got to say, often we tend to find too, when a small business is engaged in tax evasion, quite often wage theft is tied up there, and something I think any progressive movement should be quite concerned about. But look, there has been certainly progress both at the global level and at the domestic level. So we've seen some of the really big asks the Tax Justice Network set out with have been met. One of those has been that tax authorities between countries actually automatically share information with each other. So there's currently about 100 countries that participate in that. The old system used to be that a tax authority, if you were trying to track down an individual you thought was engaged in tax evasion, you would have to go to the tax authority in the other country. You'd have to give them a brief as to why you wanted it. Sometimes you'd have to go to a court. My understanding was in Switzerland, you actually even give them the Swiss bank account number that you wanted, which was nearly impossible for a tax authority to know. Whereas automatic exchange means now if I'm an Australian and I go and open a bank account in Switzerland, and I'm from memory, Switzerland is a participant, the Swiss bank has to report it to the Swiss tax authority, and the Swiss tax authority has to report it back to the Australian Taxation Office automatically, so that the tax authority in the home country of the person automatically knows that they have a bank account somewhere else and that there might be revenue that's taxable located elsewhere. That's throwing up some interesting data. We've just been looking at the latest data that the ATO has released on that. Interestingly, we've got an uninhabited island that holds 12 bank accounts with $2.5 million in Australian banks. So there are some pretty clever seals, I guess, who are holding bank accounts here in Australia. But look, this automatic exchange of information, the estimate is that's already covered at least $170 billion worth of revenue since 2015. We've also seen through international cooperation about 300 harmful tax practices being shut down globally. That's a positive. And there was a setting up of a body called Tax Inspectors Without Borders. And that's a global body that basically retired tax officials or serving tax officials are released into, and they provide sort of on-the-job training, often for developing countries, well, it's for developing countries to be able to deal with complex tax cases. And it also helps in a sort of tax, basically deterring tax evasion, tax avoidance, because if a multinational corporation now knows that there will be additional tax official resources with skills, they might be less willing to try and engage in the kind of tax evasion, tax avoidance activities they might otherwise try and get away with in a developing country. Domestically, we've seen a range of laws introduced that have cracked down to a varying degree on particularly large corporate tax avoidance. And I think, the feedback from the ATO is those tools have been effective at curbing some of the worst practices they would have previously seen, and have also changed the culture. They're seeing a lot more compliance, would be the argument they would be making back. In terms of solutions, I'm going to break these down into sort of three categories that I'll briefly mention on. So one is sort of a grab bag of transparency measures. Miranda already mentioned a disclosure of beneficial ownership on a public register. That's a very useful measure. You often see all sorts of, as disclosed through the Pandora Papers, a whole lot of illegal activity taking place through shell companies. But normally the reason you would use a shell company is you want to conceal that I'm actually the owner of the shell company. Now, the thing that really needs to happen with a beneficial ownership register is this second thing, which is disclosure of nominee arrangements. Because if I'm engaged in some serious criminal activity, be it money laundering, tax evasion, fraud, lying to a public authority about I'm not the owner of this company, or giving a false name and details, is not particularly going to bother me because I'm already facing jail time for my serious criminal activity. The problem is most of these front companies use nominee arrangements. So you get someone, preferably someone who's got a clean record, and they act as a nominee. In some secrecy jurisdictions, lawyers and accountants will act as nominees for you, and including here in Australia. You can go on, there are plenty of businesses here in Australia that will offer you nominee services. They've gotten a little bit more cautious. Previously, they used to quite boldly, a number of them would say, if you're a foreigner and you want to conceal your identity and help hide whatever you're doing from authorities, we'll help you and we'll put up an Australian nominee. They're a lot more cautious about saying that kind of thing now, and it's a bit more nuanced in the couching. But what you really want is an offence to say, if you're acting as a nominee and don't disclose who you're acting for, then you're on the hook as the nominee. And that would really help address these sort of shell company, shell trust arrangements. Whistleblower, look, we have made progress on whistleblower. That was one of the really positive things the Parliament has done. We've seen the introduction of laws to cover whistleblower protection and compensation for the private sector. That's been a positive step forward. A couple of things that got missed was we really need a whistleblower protection authority so that whistleblowers have a single place they can go to get support if they're blowing the whistle on whether it be tax evasion, tax avoidance, or other sorts of criminal activity. And secondly, we believe in some cases, if you can't protect the whistleblower from retaliation, or you can't compensate them, and often in many cases, some of the really big whistleblowers that have come forward, that's it. Their career in that industry is completely done after they blow the whistle. They will never work in that industry again, and they've got to change careers. So in those cases, we actually think there is a case to be made for rewarding whistleblowers, and it's been quite an effective mechanism in other jurisdictions. You need safeguards over it not being abused and misused, but we think there's real merit in it being a third plank. Certainly not the only thing. Compensation and protection are definitely still pillars you want there, but having reward on the table is a worthwhile measure. There's another one that the ATO wanted and the Board of Taxation managed to kill off, which is mandatory reporting of aggressive tax schemes and arrangements. And the ATO certainly wanted it because it gives early warning. So currently there are measures that can allow the ATO to pick up stuff, but their kind of view on this is often that's after the scheme or the arrangement is already well in place and they're sort of chasing after it. Having it reported before you go out and do it And having both ends having to report it and being an offence not to do it has worked really well in the UK. So even by 2013, the UK law that did this had already seen nearly 1,000 tax reforms introduced to close loopholes through this mechanism of simply requiring people to report if they found some sort of loophole they were trying to exploit, and having to report it to the tax authority as they were using it actually allowed the government to act very fast to close down loopholes. So that was sort of the assessment in that place. Also, we think there is more that can be done on corporate reporting, and probably the one that frustrates us most is companies in Australia are not required to disclose subsidiaries they don't think are material to their operations. And we've tended to find quite often they are subsidiaries that are in secrecy jurisdictions that raise real red flags about the company deciding it's not material, but we don't quite know what that subsidiary is in the structure to do, and it doesn't appear to have any legitimate purpose that's very obvious, and none of their notes explain why they need it, or what, why have you set up a company in Delaware, for example. Closing loopholes, look, as explored by the Pandora Papers, reform of our anti-money laundering laws. The big reform there, it's been considered through two major reviews by governments. It's in a parliamentary inquiry at the moment, is bringing lawyers, accountants, and the companies that set up companies into the fold of the anti-money laundering laws. So currently, they're not required to report suspicious transactions. They're not required to avoid doing business. One of my kind of, poster child stories on this is a person who was later convicted of being a drug dealer, who managed to buy a property up in Queensland using, as part of the payment, was $181,000 post office money orders, was used to make the payments. And for some reason, the lawyer and the real estate agents involved in that transaction didn't seem to think there was anything suspicious enough about that kind of arrangement that they needed to report it to law enforcement authorities. In terms of corporate tax reforms, there's also limiting or eliminating tax deductions for related party interest payments. So we tend to see this loaning yourself money from offshore and then getting to claim the interest you repay yourself to the offshore entity is often an area of significant abuse. Hong Kong doesn't allow it at all. There have been proposals, certainly Labor took to the last election some proposals about at least limiting the amount of interest you can claim back. The ATO has run cases against this, but generally it can only run cases where the repayment in interest is at an obscene rate that is well outside what the market would normally take. They're the kind of cases they can possibly count on winning. If you're only charging yourself an interest rate that's slightly inflated, you're probably going to get away with it. There has been a global move towards a minimum global rate of taxation for multinational corporations, and Australia signed up to that. Interestingly, that was largely led by the US. At the end of the day, there was a lot of discussion between governments. It was a bit questionable whether it was going to get across the line. And then when the Biden administration came in, they basically put forward a proposal that managed to really get governments to align. And there's now an agreement to try and set up a minimum rate of global taxation for multinational companies. As the Tax Justice Network, we would have preferred, and our long-term view continues towards being a system of unitary taxation with formulaic apportionment. There's still debate, that would not be an easy thing to do, and it's still possibly open to abuse. I'm not going to pretend otherwise, but the overall view is it's going to be better than what we've currently got. What that means in simple terms is you would have a formula that basically divvies out profits from a corporation based on where they're actually doing business, where their employees are, where their manufacturing is, where their assets are, and where their sales are. You have a formula that divides it up in that way, and then effectively each jurisdiction can tax the portion of the profits they get. It is used in the US between states. So states, companies operating across the US already are subject to a formulaic divvying up of their profits between states within the US. So that it's not a theoretical model. It does have examples in the real world currently, but it would take quite a bit to move there, and that's a long-term sort of goal. Revenue measures domestically, so moving into Australia, looking at some of those things. Miranda mentioned a whole lot. I've given you here a few that ACOS have costed, so it gives you a bit of a sense of some of these reforms. On that, even capital gains tax, if you reduced it, the current rate's 50%. If you said the capital gains tax discount was reduced to 40%, that would give you back 1.2 billion in a single year. So, you know, there's quite some large money there. I should say superannuation is probably one of the areas that, you know, is in most need of reform. It is a very regressive system currently. The flat 15% rate of tax really disadvantages. Sitting in the room with representatives of the superannuation industry, a lot of them, I was kind of shocked to learn, basically they didn't see a lot of value in people earning less than $50,000 a year were barely worth any consideration for. So you've got this whole industry that's geared towards looking after high net worth individuals. That is where their focus is, and they fight very hard for those people particularly. And we've really let this industry emerge in a way that means they have vast sums of money. A government willing to take on the superannuation industry would be a very brave government, unfortunately, just because of the sheer volume of the sheer weight of the money they could bring to bear to run a campaign, given, you know, what we saw the mining industry be able to do when they didn't like a tax reform. But that said, that is an area, and I like John Daly's from the Grattan Institute's quote on this. He says, you know, well, people often say if you tried to move on superannuation, people would find other schemes to avoid paying tax. And his response to that was, you know, there's pretty much nothing legal that would allow you to get the level of tax discount that you get as a high net worth individual, a very wealthy person, through our superannuation system. All right, and look, the other thing I will say, changing culture is really important, and we have seen some of that culture change, I think, particularly with regard to large corporations. Now, the little slide I've given you here, this was an ad put together by I believe it was an accounting firm during one of the Swiss elections, and it's a picture of a family, a Swiss family at the breakfast table, and they're all wearing balaclavas. And sort of the comment below is this how we want to be known to the world? And that was kind of, you know, the change of culture to say, well, assisting in tax evasion, tax avoidance should not be something that anyone in business or anyone in the community should want to be part of. And changing culture towards seeing taxation as something valuable to our society and that provides benefits to our community is a really important cultural change. Finally, look, I will finish off by saying, in terms of how do we get there, look at, there is no magic solution here. It is all the normal campaigning tools that people would use. So as an ordinary member of the public, it's having your voice heard, whether that's you want to get letters to the editor to basically make the case for various tax reforms. It would be whether you're willing to write letters, emails, communicate in all those normal ways, engage in the political system, you know, whether that's engaging with your MPs or your senators or mobilising others for change. There is nothing magical about this. And I think, frustratingly, I mean, Miranda talked about one of the biggest tax giveaways we've seen to the wealthy is the locked-in personal tax cuts that we've just had. And the level of community opposition to that was barely registered. Now, if that had been a big giveaway to large corporations, I have no doubt there would have been a huge reaction from the community, and a government would have found that very hard to pass. As it was, we've even, you know, we had Labor roll over and basically agree to these enormous amounts of money being given away to wealthy Australians, when that money, you know, we have so many community services and so many needs in our community that haven't been met. So I'll end there, and happy to also take questions along with Miranda.
Thank you so much, Mark. And thank you again, Miranda. I know we've got to 1:45, so I don't want to spend too long speaking myself. There's been a number of really good questions, and one which everyone can see in the chat there from Richard Archer about everyone has good ideas for tax reform, political task of getting them in place. And Miranda has said, you know, I agree, you can't do tax reform from opposition in response to that, and maybe we'll get Mark's response as well. I was just get a question. It's a similar question I received from Rosalie, saying that private sector employed men on modest incomes in key electorates were spooked by the prospect of increased corporate and property taxes at the last election They thought their livelihoods were on the line and voted for no change. They voted for the Conservatives. What ways can we creatively approach tax reform to be both politically palatable and effective economically? And it's, it's related to that question from, or the point there from Richard. Mark, you're on the screen. Did you want to respond to that sort of question first, and then I'll flick to Miranda?
Sure. Look, I actually, unfortunately, I felt Labor made some tactical mistakes at the last election. In fact, on negative gearing and the capital gains discount, they'd actually taken that to the previous election, and their own polling, and I think the general polling showed, the property industry tried to run a campaign against them, and it really didn't have any cut through. They didn't lose that election over that particular issue. I think in the last election, unfortunately, what they tried to do was they had this view they were going to be painted as, bad economic managers. So I know in talking to them, we were working on a number of policy reforms, and it was always like, well, you can't have any more spending on this unless we've got a revenue measure to offset it. So they went to this great trouble of demonstrating how they were going to find every dollar for every initiative they were going to do spending on. And in doing that, they opened themselves up to this vulnerability about all these different tax measures. And I think, their opponents were able to find a couple of measures and confuse and muddy the waters. Their own polling, my understanding is their own polling showed people who voted against the franking tax credit, by and large, the people who voted against that and were concerned about it were people who don't benefit from it, which was just how much the water got muddied on that. So what you had was doing too much at once, allowed them to be attacked. And I think the really disappointing part of this is post-election, they've been kind of gone completely the opposite direction and saying, well, we kind of lost, so we'll throw out all the tax reform we talked about previously, we'll just jettison the entire amount, rather than perhaps more strategically thinking, well, which of these things could we actually do? And it would have probably been clever going to the last election, not bringing up all these measures. If you once you're in office, if you moved on the franking tax credit reform thing, I think you'd find the majority of people wouldn't have been concerned about it, and you would have had time to probably explain what it is and how it works. And in fact, most people would have figured out it wasn't going to affect them, and it would have met with the kind of opposition. So I think there were some tactical errors there. I do think, like I said, on the negative gearing, the evidence was, by and large, I think most people accept there would need to, there is a case for tax reform there, or aren't fussed if there was to be tax reform in that area. Certainly on the corporate side, what we did see is the Tax Justice Network, we had massive support for that, in that we did our own internal polling. We pretty much put forward all the measures the Tax Justice Network were looking at large corporate taxation, and our pollers tended to find it was around between 95 to 99% of the population supported pretty much any of the reforms. Now that was in a context too, Joe Hockey gave us a huge boost because his 2014 budget was met with such a strong visceral reaction from the community about it being an unfair budget that it gave the Tax Justice Network an enormous boost with some of the reforms we were looking at. So in a sort of perverse way, Joe Hockey was quite an ally in getting a number of tax reforms through.
There's a reason why I'm an academic, right? Not a politician. I've just been looking at the comments in the chat about the relationship between tax reform and politics, and this sort of package. The big tax reforms that have happened have usually been packages, which means they're compromises. So I guess Labor's kind of main thing coming to government, coming to the last election was that idea, as Mark said, of paying for what they were going to deliver. So that's one kind of bargain, isn't it? The sort of public goods you're going to deliver. I reckon probably that works better by just delivering the public good. The one I would want is, my favourite is universal free childcare currently, right? So that's something I would want for the community. That has a cost. I think it has a dynamic and economic and fiscal kind of benefit as well, actually, over the longer term because of women's workforce participation. But that does have a cost, but I'd deliver the benefit first and then kind of work out the financing later. Whereas they sort of tried to do all that together, and I do think that got very complex. The other bargain is that, well, you do deliver reductions in tax as well as the same time as rebalancing or changing the base. Hence your 1980s, someone's referred to the 80s bargain. The GST was another bargain like that. you know, the big thing that set us back in Australia, in my view, was the Abbott government. I think we have really suffered over the last decade by repealing the carbon tax and repealing the mining tax. I mean, there were flaws with the mining tax, but the carbon tax was a very effective little operation, and it would have, you know, we just needed to finance structural adjustment in regional and remote communities, and we still need to do that, obviously. And now we're going to need to kind of match up to the rest of the world. So sometimes I think the equilibrium just we fall behind. That's not a very positive or optimistic view. The optimistic view about the tax rates, which I'm very unhappy about, but nonetheless I think they're not very movable now, is that the income tax continues to collect revenue over time, right? We will see inflation again. We will see wages and other incomes inflate and go up again, and that will support the revenue base of government. So that's, in a sense, will recapture some of that lost ground, but it does take time. And we still do need to broaden that base and tax wealth and capital better than we currently do.
Thank you. We've got time for maybe one question more. We probably should make these things 2 hours, but I know people are probably a bit sick of Zoom. Original question there came from Jack. He's asking about the Greens plan for tax reform, which included a across-the-board super profits tax, a generalisation of the mining super profits tax that Labor tried to bring in and Rudd came unstuck on. And that obviously is, brings up the question of, and you've been talking about the carbon tax, but more generally taxing economic rents. So the land taxes, carbon taxes, which are kind of, you know, tax on pollution can be seen as a tax on rents. What do you think about that generalised super profits tax, which may, you know, as Don Sutherland's mentioned, that if there's if the Labor government, Labor does win, you could have a Labor government dependent on the Greens, maybe in the lower house, maybe in the upper house, and that policy could come to the fore. How do you think that's an efficient way to do things? I think the Greens have set theirs at 6%. I think when the debate about the mining super profits tax was happening, some of the business community were talking about 7%. What do you think of those kind of taxes? What's your response to that, Miranda?
So the challenge for that, I guess, and I can see what they're doing, is that headline corporate tax rates are going down globally. And so what the tax like that does is it removes some of the base from the tax. You create some kind of allowance, whether it's some equity allowance, as you say, what they've called a shareholder, like a certain share of profit that would be untaxed. Economists might call it the normal rate of return, and you're trying to capture the top. But to get the same or more revenue, you have to have a higher rate on that top chunk. And I just think that's just unsustainable in the kind of global environment. I guess but I get what they're trying to achieve. And so in the mining sector, you could achieve it by taxing resources and mining better, you know, to actually better royalty, like royalty designs and higher rates on royalties. Clearly that's not stopping production. And what we're seeing, that some of the reform that Mark talked about at the global level, this sort of global taxing the very largest multinational enterprises, that is a bit like this, but it's bringing it back to countries and having them apply their own corporate tax rate to it. So you could, I guess, have a 2-tier kind of corporate rate structure. The trouble with that is then you get lots of complexity domestically. So I tend to go the other way and say, let's bring it lower and keep the base broad. You know, it is really, the corporate tax is a real compromise, right? The corporate tax is not ideologically pure, right? It's not economically pure. There's all these underlying things we want to tax with the corporate tax, and economic rents is one of them. It's a good vehicle for doing that for some kinds of major transactions, but it's very clunky. And so, to be honest, I wouldn't have pinned my Greens hopes on that reform. That's not something I would be much keener to tax high wealth and high capital earning individuals better, right? The underlying individuals, and to redistribute that. I know they've had it costed, but the costing would be static, not dynamic. My guess is there'd be a lot of change, and I'm not sure that I would trust those very large revenue numbers either. So I'm a bit skeptical, I have to say.
Oh, fair enough. It's good to hear. We're pretty much on time, almost, but perhaps I'll just go to Mark and have anything further, and then back to Miranda for final comments, and then I'll wrap up so everyone can go and have dinner. Obviously, there's so many questions coming through, but as I often say, you can find Miranda on Twitter, you can find Mark, you can talk to there's not ivory tower academics or campaigners, so you can continue the conversation. Don's got a question there, maybe a cheeky one about MMT.
I'm happy to comment, but why don't you go to Mark first?
All right, no.
Just on the super profits tax, look, I think, you know, taxing higher profits is definitely worthwhile. I mean, wouldn't expect us to say anything else. But look, there certainly are challenges. I mean, it makes sense on certainly on assets that you can't move. So a mine, I mean, and why it makes sense on mining is you can't take the mine offshore, right? Although you can engage in, the other thing you need to be careful of is in doing that, you certainly generate incentives for people to start trying to do more offshore profit shifting. So you need to make sure your system is robust enough to avoid that. You know, in the mining industry, one of the techniques there is you suddenly set up your marketing hub. You know, so if you're Glencore, you have your marketing hub out of Switzerland, and you say that, you know, marketing's a really expensive function, so we're gonna you know, charge ourselves a lot of money to do marketing out of Switzerland, so we shift our profit from Australia to that. It becomes even harder when the business can move. So if the business doesn't have to be in Australia, you need to be careful that you don't actually have businesses say, well, we'll just pick up stumps and move elsewhere. Now, that is always an argument business tries to use, and they use that for tax competition purposes. So we need to be very careful about that argument, because at the end of the day, often the decision about tax rate is often a third order decision. When a business decides where it's going to locate, it's often more about, am I going to make profit in the first place? Have I got a stable workforce? Is it a stable government? Do I have the services I need? Does it have the infrastructure? They're all really important decisions. So look, that's probably what I'll say on super profit tax. I think they have value, but you'd need to be cautious, and you need to make sure your design is really robust.
Thank you for that. Well, I will let Miranda have a final word, and then I might go back to Mark as well. Anything else to comment on? As I said, we can't get to all the questions. We try to keep these to an hour. We'll probably go a few minutes over. I saw that Jack is saying we should keep going from WA. Thanks for joining us, Jack. Jake Whitty. But we do try and keep these to an hour, so I'll let Miranda have a final comment, and then Mark, and then we'll adjourn. But I encourage everyone to keep the conversation going via social media, and if anyone really wants to, you know, email us at Search, and we can probably put you in contact with both Miranda and Mark, and of course join the Tax Justice Network mailing list as well. So over to you, Miranda, for some final comments, and then I'll go to Mark as well.
Oh, there's just a couple of things in the chat I think are probably worth taking a brief comment about. One was about the Tobin tax. So it is quite an interesting idea. That idea is a tax on financial transactions, and the main goal of a Tobin tax, you know, goes back to the 70s and earlier, is actually to keep speculation, to control speculation, to control hot money flows, whether it be currency flows or speculative money flows, or even stock trading. So some countries do it, actually. Even a country like Hong Kong actually has a sort of financial transactions tax at a low fraction of every trade. It doesn't raise a lot of revenue. So there may be a good argument for such a tax, but it's a behavioural change kind of a tax. It's not a revenue tax. The Australia Institute has a little paper on it. If people are interested, if you do a search, they have a policy brief. They estimate it could raise $1 billion a year. So just as a reminder, our revenue at the Commonwealth level, I gave you some out-of-date stats, it's around about 480 or 490 billion a year. So $1 billion a year is not nothing, but it's a small part of the big puzzle. And look, just on the comment about OPEC and minerals, I think we just are not taxing our minerals, you know, enough. And there are various ways we could do it, and public ownership is one of them, to be frank. So, you know, there are different ways one could do that. On MMT, that is kind of a bit provocative. You know, so what I would say, but we're not having a proper conversation, John, is I would say, okay, so let's just abolish all taxes tomorrow. And, you know, that's nonsense, right? I hope you would think that, but maybe you wouldn't. and rely solely on the currency and debt. In fact, we need those taxes even to sustain the monetary system. So we sort of have a combined fiscal and monetary system. And you've got to remember the political context in which taxes happen. So taxes sort of evolved as kind of the most democratic or least intrusive way for governments to raise revenue in a market economy. There's a political reason why they did that. There's a political reason why seigniorage, right, controlling the currency was not, you know, no longer was the dominant way that governments were financed. So anyway, that's my view, but debt is fine as well. So I wouldn't criticise debt. I might let Mark have the last word if there was anything else, and then, but I'm happy to stay as well, up to you.
Just really quickly on MMT, look, I would say Stephanie Kelton's The Deficit Myth is well worth a read. But look, the point that she would make, and, you know, we can debate the finer points of MMT, but effectively, speaking to a number of economists, I don't think there's a disagreement that a currency issuing government can simply issue currency for most, and you can produce finance by that. But the cap on it is you create an inflationary effect. So you still need to limit the amount of currency that is in circulation, and therefore, they're not arguing against taxation. They're basically saying taxation is then the way to remove currency out of the economy to keep your cap on inflation. Because if you just kept financing by printing money, you would end up in a situation of hyperinflation, and that would be disastrous. And they acknowledge that. So the notion that, I think, you know, some of the both opponents and I think even some of the proponents who perhaps want to take a simplistic view of MMT and sort of say, well, it's just you put out a printing press that just issues money. That's not what it's saying. It simply says the lever you need to pull is inflation, not balancing. It's not a question of whether you balance the budget for every budget. It's a question of, are you managing inflation, and taxation then is taxation and spending are in the service of managing inflation, is in simplistic terms my understanding of the kind of arguments they're mounting. Now, I know there are lots of finer points that economists would debate about MMT, but I think that's sort of the central argument they seem to make. And as I said, Stephanie Kelton's book certainly worth a read on that, although I certainly wouldn't agree with all her points that she makes in that book.
Thank you so much, both of you, Professor Miranda Stewart, Dr. Mark Zirnsak. I don't know if you actually go by that, mate, but you've earned it, got the PhD, so why not, if we're going to use people's titles. Thank you, everybody, for joining us. Thank you for all the questions. Of course, sorry, we can't get to all of them, but like I've said, you can speak to our panelists through direct, through social media and otherwise. I've put up the link to that Australian Institute Tobin Tax Arguments and Evidence, and there's in the chat also links to Tax Justice Network, to Miranda's website, and to our YouTube channel, where you'll be able to watch this again tomorrow and share it with friends, family, network, etc. Thank you so much to our panelists, and thank you to all of our participants. We'll see you. Keep an eye on the Search Facebook page for our next event.
Thank you.